like, do you guys want to continue? And at this point, we've been on the phone for like 45 minutes. I was like, no, we might as well see it through. So we just kept rolling. So anyway, I finished that, and I was like, I need a coffee, like stat. So I'm ready to rock and roll, man. You want to get going?
Welcome to the Money Huddle, a podcast that discusses financial topics for families, retirees, and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Advisory Alpha. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Advisory Alpha may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and I'm here with my business partner, Ross Marinell. Ross, how you doing, bud?
Hey, Michael, doing wonderful today. We are so close to kids going back to school. I don't know how you feel about that in your household. It's always a little bittersweet, but with them heading back to school face-to-face again, I think it's a day we have circled on the old Marinell household.
We're pumped. I'm excited about it for a number of reasons. One, we have a really great school that our kids are going to, Providence Classical School down in Rock Hill. And I love that school. Our kids love it. And number two, probably more importantly, I think it's just time for the little ones to get socialization with the little ones. It's like we've enjoyed our family time this summer. We've tried to make the most of it, the best that we can. But it's time for them to be around people that can talk with them on their level, that they can get stimulated on their level. And, brother and sister need a little time apart during the day. So, it's just that time.
We go.
It's that time,
I understand that. I understand that. Well, hey, so a lot is happening, but we've got some news that we need to discuss and put out there today. And that is that my business partner, Michael, who started a 10-year journey to master Brazilian Jiu-Jitsu, has achieved a black belt in Brazilian Jiu-Jitsu. This was just last week. Congratulations, my friend.
It finally happened. And, it's like anything else. It's one of those things where a goal, like you look forward to it for so long that when you finally get there, it feels somewhat surreal, like it hasn't really happened, but it's that time, man. Time for a black belt.
So we've been working together long enough that I remember when you started, and how many times you'd show up to the office.
I had a
with
couple.
A black guy. Or
That's what I told somebody the other day when they were like, "Oh man, what's that like?" And I said, "That is a lot of beatings. It's a lot of beatings over the years, but." It's been wonderful, man. Definitely a great outlet for me, and not without its trying times. Of course, anything over a decade. I mean, 10 years. That black belt journey is older than both of my children right now. So, it's kind of a lot's happened since I started jiu-jitsu. Got married, started our company together. Had both of my kids. You've had kids. I've had kids. I mean, it's been a minute.
I just jotted down. That's a long-term achievement that's interspersed with short-term pain. That journey is it's physical. It's emotional. It just takes dedication. Just walk me through that journey from the first time you walked in there with your white belt on.
I have to think. Because it has been a while. But, one of the things about our school specifically, I mean, we started out, we didn't have, unlike a lot of the guys that, and girls that come and train today, we have multiple black belts at our academy, all different, brown belts, blue belts, purple belts. But when I started, it was mostly white belts. So we were like this group of beginners, like all trying to like strangle each other. And if you've trained in jiu-jitsu long enough, one of the most dangerous training partners to have is a beginner that doesn't know what they're doing, because they could spaz out and just kind of hurt you. And it's kind of human instinct, right? Like the beginner thinks, oh, this, upper belt trained martial artist is going to try to just destroy me. And so they attack, and it's nothing like that. And so that some of the most dangerous training partners can sometimes be the beginners, because you don't know what you don't know. And so you overcompensate by being very aggressive. And so that was the school that I started in. It was a lot of like white belt on white belt crime.
It was Wall Street bets.
That's right. Yeah, that's right. But I mean, it was like, if a purple belt came in, it was like, oh my gosh, a purple belt. But, the great news is like, so several of the guys that I started with have stuck it through with me, and, have either already, some have attained their black belt. Some are like right on the doorstep of getting their black belt. And that'll be really cool, to see. It was cool to join the guys that have already been promoted to that level, but it'll be really cool to see some of my friends that are right behind me coming up and getting it as well. So that's cool.
That's cool. It's, one of those things that that journey for you started about the time we started working together. And so as we were sitting here just thinking about how many just corollaries there are between the progression through that, that field of expertise to what we've kind of lived over the last 10 years with our clients. There are so many things that just kind of layer right on top of each other. And I think one of the cool things about any kind of martial arts training is, and we talk about this all the time when we focus on long-term planning for financial, for retirement or just investment management and, kind of growth and accumulation, is you've got to celebrate those milestones along the way. Because to think that you're going to do something for 10 years and not have moments of success, appreciation, just reflection, you won't make it. And I feel the same way about someone who may be on that, let's say that last 10 years of working. It just seems so far. And you've got to build in those intermittent but very important milestones. And I think the martial arts training has really perfected that by the progression of the belts. Because each step along the way, you get that opportunity to just kind of celebrate in your achievement. And you may not have made your full extended long-term goal, but you got one notch closer.
Yeah, it definitely gives you a visual, marker to say, okay, this is like where I'm at. But, one of the most challenging things I will tell you about Brazilian Jiu-Jitsu specifically is it's an individual journey, but there's a lot of people on that road with you. And so it's extremely tempting to look around at everybody else and start judging yourself against other people. So there's like, you might be a blue belt, but maybe you're one of the more competitive blue belts in the school, in the academy. So you start thinking, you know what, I really should be a purple belt. I shouldn't be a blue belt. I should be a purple belt. And the truth is that you're a really good blue belt, but you don't know what it's like to be a purple belt yet, because you're not. And so you compare yourself to other people and your peers. And, just like anything else, I mean, there are people with different skill sets, different physical talents. There are people that pick it up faster than other people, people that get discouraged. And so sometimes what happens is somebody that's having a lot of success early, they get very discouraged when it starts to get hard. When you start to go against better training partners, or you start to go against people that are just flat out, way more experienced than you.
Hey, I feel for our new stock investors who just started about 16 months ago. Because that road to retirement might get a little more challenging.
Absolutely. I mean, that's the same. I mean, that's exactly, a great corollary. I mean, because I tell people that all the time is, you think about it's like you can't compare yourself to other people, which is our natural human tendency, and the thing about jiu-jitsu specifically is, there's some additional belts, but for the core practitioners, there's really like 5 belts. There's white belt, blue belt, purple belt, brown belt, and then black belt. And then, of course, if you have some people that have been practicing for a very long time and are like master level, there's coral belts and red belts. But those are, people that have probably been alive and training jiu-jitsu longer than I've been alive, So for the most part, there's 5 belts. And, but you could be a purple belt for a couple of years. So somebody who's a brand new purple belt goes in and sees other purple belts and then compares himself. Like, well, they might be brand new and they might be comparing themselves with somebody who's got 2 or 3 years more experience. And you don't know that if you're just looking for the visual cues. And so it's only when you get in there and you start actually doing the training that you realize, like, oh wow, this person's not, we're not the same. And that's the thing that I try to tell people all the time is that in fact, I had this conversation earlier today with someone, and I was saying, the thing, if you talk to a black belt, one of the things that I think most black belts would share with you is that by the time you reach that level, yes, you've mastered enough that you have a black belt skill set, but you also are humble and aware enough to know there's so much that you still don't know. There's so much that you could still learn. Mm-hmm. And it has a way of like beating the ego out of you. And, I think that the investing in the stock market can do the same thing. A lot of novice investors can come in and maybe they have some early success, and that's fantastic. But it scares me when people get really overconfident because of maybe what just ended up being a lucky time period to be investing in equities. It's not necessarily skill that you decided to invest when the market was down 30%. Good for you if you did that. But now it's, that's the real lesson that I would say is there are a lot of people that feel like, oh, you know what? My trailing year-over-year returns are phenomenal. I'm a black belt investor, and they've been doing it 1 year. I'm like, no, let's try a decade. Let's try a decade plus, and then let's talk.
Yeah. So, so that's some great insight, and certainly congratulations in order. And again, we've sort of been on this retirement planning journey for that length of time, and so I wanted to pivot and just kind of share like. What have we learned over a decade plus of retirement planning and working with clients of all skill levels? Because let's be respectful. We have some clients that are black belt savers that are at the top of their financial planning game, and they come to us for that little guidance, that little extra motivation to just stay on track. And then we have some people who are just getting started on their own financial journey. And so I thought it might be fun just to look back over a decade, like a few things that have just transpired and what's changed. I mean, first, I'll kick this off, and then we'll kind of go into like a few things that we learned, just a few big ideas that I think are always ever present. Just as a side note, so I look back at the largest company in 2010. It was ExxonMobil at a market cap of $343 billion. So we've talked about this. It's probably been a little while. So today, if you fast forward to now, our largest company is Apple with a market cap of $2.4 trillion.
Yes.
We now have 5 companies that are over $1 trillion.
I wonder what
as Facebook sneakily.
Yeah, I wonder what companies like, not just the largest companies now, but like what companies have a market cap that's bigger than Exxon did even back then. Yeah. Okay.
Funny you should ask. So I ran so I was using Y charts and just running a market cap overlay, and there are now 29 companies.
Wow.
Over $343 billion that I.
And not to mention, you got to throw in Bitcoin in there too, and some of these cryptocurrencies.
So a lot of things have changed. So I was going to I'm just going to throw this at you, okay?
Okay.
And I want you to jump in here and throw some in. So a decade of retirement planning. What did we learn? The first thing that came to mind was there's always the next crisis. So rolling back to the beginning of the 2010s, We had Brexit, Greece self-combusting. What does that mean? This is the end of the euro. This was a massive play. And then, of course, that goes to the first debt ceiling issue we had, where the government's running out of money. Are they going to refund each other? Then we've had federal spending that's always been in the news for the last 10 years, whether it's quantitative easing, buying
unsustainable
bonds,
debt, unsustainable
balance sheet. It's unsustainable. We've been saying that for 12 years.
Eventually, they'll be right?
Then it's Brexit,
they'll eventually be right, and then they'll be like, "We called this all the time."
Well, at this point, we've had 3 presidents under the last since we started. So, Obama presidency, to Trump, to Biden, and at some point along the way, that becomes an issue. One political side or the other is concerned. So you fire away. Tell me something that you kind of stuck out.
You're right. I agree. First of all, wholeheartedly that there's always another crisis. That is gospel when it comes to investing. There's always going to be another crisis. There's always going to be something where they're pounding the drums and saying this is it. This is going to be what takes us all out. Because I would say that sells newspapers, but we don't have newspapers anymore. It's almost all digital. So that drives clicks and traffic to the website. I would say one thing that has stayed the same, and I still feel this way, is that having a good plan that you implement is better than a great plan that you do nothing with. And on sidebar, it's like planning is superior than products. A lot of people buy products or invest in certain things thinking that that's the fix. And I think the fix is like having a real plan that you can work and stick to through good times and bad times. Yes, you make adjustments. Yes, you make course corrections as life does twists and turns, but you having a unified like planning strategy that you are working towards at all times is better than just going it out there and just doing it yourself. Because as you just said, there's always something coming up to change, and I couldn't imagine like being on that type of roller coaster ride with no blueprint.
I will add to that. So the note I jotted down was financial planning is, in my view, it's basically good decision making compounded over time. So that each phase, wherever we start to engage with somebody and come alongside, is can we start to help make good decisions with them and just compound that year over year over year over year. So maybe it starts with a debt reduction strategy to get rid of credit card debt or a high expense auto loan or something along those lines. And then it blends into building retirement savings plans through IRA accounts or Roth or something through their employer. And it's just this combination of life experiences and good decisions that you try to make year over year over year. But I also thought, too, that good decision making needs to come in an environment of patience and positivity. That sometimes it takes time for the best answer to emerge. It's not just what's on our mind today, but letting that simmer and thinking through over time what the best.
Oh man, like trying to be positive and in this environment where it like people the overall energy for so many folks is just negative. Negative about the government, negative about the economy, negative about the stock market, negative about schools. It's just like, man, trying to stay positive. That's a full-time job now, right? We need a positive officer. What was it? Chief Positivity Officer, CPO. I bet there it is. That's going to be a position. You wait. Chief Positivity Officer. There it is. Some company's going to pick that up, and they're going to create an amazing culture.
So here's something. Just having come alongside so many people that we've had the great opportunity to work with over time, seeing people transition from their employment paychecks to retirement. So the idea I wrote down was that we want stocks for growth and we want cash flow for happiness. Because once that last employment check comes in, if you have a predetermined way to distribute money, whether that's through just the combination of Social Security, pension, a safe withdrawal off your portfolio, some type of predetermined income plan where you know where you're going to tap for income first. it just takes so
I
much stress out of the
agree, and I
situation.
think that that's the one thing that if I would stress to anybody who is planning their retirement exit or starting their retirement journey or has even started their retirement journey and not done this is you need to have an actual retirement income plan laid out for you. Doesn't mean that it's etched in stone and you can't change things, but the retirement years and the math for retirement is much different than when you're trying to just grow and accumulate wealth. And there's a different mindset that comes in with retirement. You need to think about that. What I would tell you is one of the reasons I think it's more important or extremely important is one of the things that's been talked about over the last decade. So for the last 10 years, we went into this zero interest rate policy back during the financial crisis under a president, it was President Bush, but then, President Obama, and, where the federal funds rate was slashed to zero. And it took years for the Fed to begin, raising the interest rates back up. And we had just started to, see what I would call the low range of normal interest rate policy with the Fed when the big 20% drop happened in 2018 because the 10-year hit 3%, and there were people thought that the Fed was tightening too fast. And then they kind of backed off a little bit. 2019 ended up being a really strong year. Going into 2020, boom, COVID. And here we are back again. What's going on again? Zero interest rate policy. Fed's making bond purchases. And we're talking about, again, when is the Fed going to taper? Which is what, they were talking about 6-7 years ago. When is the Fed going to stop the QE? And what I would say that to share that people need to understand, a lot of people are sitting around thinking, well, I'll do something when the interest rates get normalized. What's a normal environment? We're going on a decade of this, and our deficits have gotten larger. They haven't gotten smaller. The current administration is really leaning into
larger.
This modern monetary theory where deficits don't seem to matter. They're loading up another at least $1 trillion infrastructure bill that they want to pass, but that's not really the one they want. The one they want is like $3 trillion. So, this idea that we're going to have this interest rates returning to quote normal, you have to define for me what normal is, because I think we're going to be in this low interest rate environment for a really long time, and people need to be thinking about that when they're putting their plans together.
Yeah, taper tantrum is starting to come back into the news as we see gains in employment wages, which I would think is really important. We want people to be able to make a living wage, so we're starting to see employment wages rise. We're seeing more people coming back to the workforce as the unemployment benefits get a little less rich. And so it'll be curious to see when and if the Fed does taper. That would fall back into there's always another crisis.
Oh, yeah.
So a quick hit. As I just think back over the people we've had the great opportunity to work with, how many just lived below their means that had secure income or good, well-paying jobs, but didn't really spend themselves to the max of what they could, and they just focused a lot more on savings. And living below your means is a wonderful way to get started into higher income jobs as you start to escalate and grow from your entry level position out of college to a manager, a regional manager. However you develop and grow into your job is to not let that lifestyle creep pick up. I saw a hilarious tweet the other day. This gentleman said, "Do not buy a BMW 3 Series or Mercedes C-Class. Like, you're not
right.
It's not worth it. You want to drive a Mercedes, but you don't want to drive the C-Class. Go buy a Corolla for now. Wait till you really have the means, and then go buy your S-Class Mercedes if that's what's going to make you happy." I just thought it was an interesting way to kind of.
I would say to that person, okay, boomer, because they're not buying Beamers anymore. They're buying Teslas. That's what they want. They want a Tesla.
Yeah, okay.
But I know I totally see your point, and I think what you mentioned is the term that you said was lifestyle creep, and I think that's super important. For younger listeners and people that are still growing and accumulating wealth. There's a huge tendency to adjust your lifestyle upward every time you get a pay raise, or you're moving to a different career path or a different position with your company, and you're going to be making more money. It's natural to upgrade that lifestyle a little bit. And we believe in enjoying your money and fruits of your labor and experiences, but again, going back to the plan and saying, okay, like what do I need? What adjustments do I need to make? Because when you go to retirement, the idea is, for a large part, can you live on some range of fixed income, and this is what it's going to be without, overstressing your portfolio or, really having to take a cut in lifestyle, which is translated as pain for a lot of people. So that's just, like you said, that's a habit that's built over time, just like saving. Somebody who saves over time and has become like a champion saver, those people, we have to coach them to spend some of their money in retirement. Like, listen, hey, it's going to be all right. The paycheck's going to keep coming. It's okay to spend and enjoy and do what you want. But the same, rule applies for people that are really struggling to live within a budget. It's like, it's going to be always difficult unless you figure that out.
It's a good point, because we do form those habits. They're hard to break. So saving your money every month when it comes to retirement, and now it's time to start spending your money, it's a hard habit to break, because we're so accustomed to saving. We're so proud of what we're able to save, that the day we start to have to spend that, it becomes a little painful. The habit of people who are accustomed to having a significant employment income, that we're used to spending a little bit, maybe more generously than they could in retirement, it's a very hard habit to break as well. Because now there's a potentially legitimate.
Well, you have people that get used to, like you said, living on a paycheck, and then they're watching their portfolio balance, and they're used to seeing this number on a piece of paper, and that number, whatever it may be, may represent security to them. So if they were to start pulling away from that, that's like, oh man, I'm spending my savings, and that's why it's like, look, there's many different ways to create, retirement income plans that are sound and that can work. The key is doing it, is actually creating it. I am astounded that people would go into the phase of their life, their retirement years, without an income plan. Without, here's how I'm going to try to do this. That would scare me more than a lot of things, I think. But I'm biased, of course. I work in this business, but I mean, that would really scare me, I think, not having a thought through plan. Hey, what about this? What about that? What if something happens to me? Is my spouse going to be okay? I mean, all of these things, these questions, we know people have them because we deal with folks, but there's so much information out there now. And so actually, I'll put this out there to you. I'm reading a book right now. It's called The 7 Deadly Economic Sins, or 7 Economic Sins. And I picked it up. It was a Nick Murray recommendation. So I started reading it.
Okay.
And one of the things that it talks about in there, there's this whole chapter on different fallacies that people have. And one is the local knowledge fallacy. And real high level, it's basically like some bureaucrat or policymaker in D.C. or some all-knowing decision maker couldn't possibly prescribe a solution that works, is the best solution for everyone, because we all, when you drill down into the details of individuals, we all have different stories. We all have different lives. We all have different values. Different things are important to us. We make and choose and want different things. So it's impossible to say one thing or one way of doing things is the best for everyone. And so that's what I worry about, because the internet has given everyone so much access to information. You can just do a Google search and do like retirement planning, and I mean, the world's your oyster. You're going to see millions upon millions of results. And I worry that there are a lot of people that just take that and they think, oh, this is all I need.
Yeah. And just going back to our first conversation, which is, I'm sure I could go and find some YouTube videos to get me started in Brazilian Jiu-Jitsu, but you need that hand-to-hand combat to really put it to work. And so, yeah, there's generic planning ideas that are so, very, very general in nature and broad that might help trigger an idea. But at some point, you've got to flush that through with somebody who knows your story a little bit.
Okay.
So the last thing I had on this sort of a decade of retirement planning is, boy, a lot can change in 10 years. It's hard to wrap our heads around where our economy might be in 10 years from now. It's very easy to kind of look at where we are and project that continuing on in the future. It's just our human nature, right? That's the certainty that we need to be able to operate and live a daily life. And we just know it's going to change. Just think back over the last 10 years. I mean, would you ever imagine that a fake dog currency, cryptocurrency, would have just sprouted up and attracted hundreds of millions, if not billions of dollars? Yeah. Just like how some of the stuff that's happened is quite remarkable.
I think, yes, I agree with that. And I think it's some of the economic principles that have been somewhat timeless. We're watching, test cases for them. Like, what is a currency? Well, if enough people agree that something has value, it by default can have value, even if you're sitting there thinking to yourself, what are we doing? This is insanity. But there are people online paying millions of dollars for non-fungible token NFTs, like something that just exists like on the internet. And, I understand the principles behind it, but still, I'm like, wow, like, okay, so we're not spending that money to buy like, real estate, like a rental property, or we're spending it on this digital cyberpunk or something. Hey, no hate. I'm just saying I don't get it.
So much change over the last 10 years, from the rise of social media to how we're receiving and sharing information, to the just think the changes in the trading platforms. And so we go from $12.95 a stock trade to $8.95 to $3.95 to zero. You could just go down the list of things that have happened over the last decade that it would be hard to predict and see coming to fruition, that sure enough did. And so I think it's just, I was talking to a gentleman who does massage therapy, and he was talking about the two things that really, cause people to come in. It's a lack of flexibility and a lack of patience to let the treatment work. And it's just true. You think about it, like I was joking the other day. I was like, if I asked my 8-year-old daughter to touch her toes, she could do it in a half second. Ask a group of people our age to do that, we just become inflexible over time. And so I think one of the things going forward is let's just remain mentally flexible to the things that could happen and the opportunities that might arise over that.
No, I agree with you. And so on that note, let's think about so it's impossible. So hear me now, anyone listening. This is not us giving investment advice. But where do you think over the next 10 years, where do you think people are going to want to invest more of their resources? Any thoughts?
Oh, so questions to me. It's a great question, because it's going to be continued advancements in technology, whether that is in pharmaceuticals, healthcare, treatment, to environmental advantages in problems that they may solve over the next decade. Just think what kind of solutions might arise over the next 10 years involving those areas alone. It was another topic I had kind of queued up for today, which is the shift in just the way businesses are priced, given their involvement or their ability to claim sort of an AI or just pure, let's say, non-human business. Like they just don't need human capital the way that some
Right.
legacy businesses do. And just the change in their market caps and the willingness that the market is giving them to grow, like the capital they're giving them to try and grow, to outpace these more human capital driven businesses. And I'm happy to go through those, when we have time, because I do think it's an interesting test case. But I don't think that will stop, and I still think it's going to be business innovation and development here in the United States.
I definitely agree with that. But one thing that popped in my head, and it won't be dog
money,
but I think it'd be interesting. Like, I think anything to do with health and wellness, because, and the reason I say that is because, until we figure out how we can get health insurance where it's actually affordable, I think we gotta, more people are going to be thinking about, like, the wake of this pandemic, who was really affected, who was hit the hardest, why were they, these are not questions that we can all talk about and keep our heads right now. But, when we get this thing eventually in the rear view, and people can start thinking about this critically and logically, I think there's going to be some trends that come up, and one of them I think is just going to be like, people, we got to take care of our health, and what are the best ways to do that, and and if that's nutrition, great, I think so. If it's exercise, great, I think so. I mean, health, wellness, and then maybe a dose of what the millennials have is experiencing, because life is short. So those are the kind of things I'm looking at.
See, I think it's gonna flip. I think the millennials are gonna start wanting to have some possessions. Because, hey, listen, it's cool traveling around for 10 years, but at some point you look back and go, I have all these great memories, but I don't have like a house.
It's great that you mentioned that, because
settle down. And then all of us are going to be like, let's sell our property.
Isn't it funny? This tweet came out today by Michael Antonelli. He's at Bull and Baird on Twitter. And he says, earnings estimates are rising. Corporate profits are almost at the all-time highs across every sector. Interest rates are low. Consumer balance sheets are strong. Housing prices are strong. And he says, a giant demographic bulge is coming into their prime. Gee, I wonder why stock prices are up. And I'll say, like, that's one thing that is not spoken about, I think, enough, is how large the millennial cohort is. And the oldest millennials are turning 40, like right now. And as that generation comes in, and if they're able to obviously be productive and start, getting rid of some of their consumer debt, but start buying houses and doing other things, man, you remember what a game changer the baby boomer generation was for the economy. And so I'm hopeful that we'll see that type of boom, economic boom, come from the millennials, as they start to have kids, have families, move maybe out of the cities into the suburbs, maybe move from some of the larger cities to smaller cities, but start to revitalize or grow some smaller cities. It could be really neat to watch. So,
and the next great business idea will be somebody figuring out what to do with all this corporate office space that's empty.
It'll be gyms. It'll be gyms everywhere. Like I said, everyone wants to work out. Come to the gym.
We need WeWork and their AI platform that if found out that everyone likes to drink coffee in the morning to figure out what to do with these office spaces.
Good grief.
Well, man, congratulations on a great accomplishment. And, to all of our clients that listen, people that we've had a chance to work with, it's been a wonderful journey seeing how your lives have all changed and developed and grown over that same time frame. I remember people meeting me for the first time when my wife was pregnant with Eliza. And she's crazy. 8.5 now. And to see how much... every time we get to experience alongside one of our clients retiring, what that process is like for them, we learn a little bit from it. And there's things that have happened in the last 10 years that we get to share with them. It's say, well, hey, there was a similar situation to this. And that kind of growing with our clients through their lives, it just fuels our fire. And it just teaches us along the way. and we learn so much from the people we get a great chance an opportunity to work with, and it's kind of
absolutely.
Cool think about
so
here's
to the next decade. Let's see what's on tap. So for you guys, thank you for listening. If you want us to talk about something, or if there's a guest you want us to have on the show, somebody that you would like us to interview, please don't hesitate to reach out. You can email us at themoneyhuddle@bcplanning.com. Thank you for listening, and as always, we will talk to you next time.